Hello traders, Rich here and welcome to Kucoin as episode 6, and today we are going to talk about trend lines, how to draw it, treat it, or even trade it. If you don't know about Kucoin, it's one of the largest crypto exchanges in the world with over 700 billion traded volume on the platform and 10 million registered users from more than 200 different countries. If you don't have an account yet, I make sure to include my referral link in the description below. And if you create an account through it, you'll benefit from 20% discounts on your trading fees. So let's get started. And as usual, cheers. So first of all, let's start with what is a trend line. It's simply a non-horizontal support and resistance. So we know that a horizontal support and resistance, we covered it in the previous episodes. You can find the entire playlist on my YouTube channel. So we have a resistance area when we have many failed attempts to break above a certain level or area, of course, until eventually it's broken upward, then it would become a support, and vice versa. We will have a support area when we have many failed attempts to break below a certain area. And in this case, we'll be looking for buy stops on the retest because we're expecting that the price will reject it one more time until eventually this zone would become weak and broken down. Then it would become as a potential resistance zone. The same logic can be applied on a non-horizontal support and resistance. Well, we also call them dynamic support and resistance, just like a moving average if you are familiar with it, right? So if the price is going upward, now we need to find the overall movement, or what I call a channel or a trend line that engulfs this overall movement as an overall direction. So in this case, we'll get this trend line. Of course, later on, we'll cover like when we make an offset for it, we can have a channel, a wedge, rising, broadening wedge, a triangle, symmetric triangle, descending, ascending. But for today, we'll focus on the trend line, on the lower one in case of a bullish trend and the upper one in case of a bearish trend. We'll be able to draw this kind of trend lines, right? So let's take it step by step. So when the price is going upward, of course, when we have a range like this, we'll be able to identify the lower bound and the upper bound, right? So that's our horizontal support and that's our horizontal resistance. So as price approaches the upper bound, we'll be looking for sell, lower bound for buy, and so on. So but when we are in a bullish trend, how to identify the overall movement? As I showed you previously, we will draw a non-horizontal support and resistance. It's just for over direction, for overall feeling about the market, about the direction, of course, until eventually it's broken downward. Then we'll be able to draw another channel like this, which is following the current overall movement. So how to do it and what are the types of trend lines? We've got two types. The first one is a long-term trend line, which I call rejection trend line. The second one is a short-term one, or what I call my trigger one. Okay, so from daily and weekly, for those who already know me, we always look for over direction for our rejection, where we are in the market. Then we zoom into lower time frames and look for setups, H4, H1, and 30 depends on on what type of trader you are, if you are a swing trader, day trader, and so on. But very important, no matter your strategy, to start from daily and weekly to know where you are in the market. So from the long-term one, so long-term and short-term, okay? So we can draw a trend line by connecting only two swings. So 1, 2, like this, for example, we have a higher high and a higher low. You'll be able to draw a trend line by connecting the lows because we are bullish. In case if you are bearish, you'll be able to draw a trend line by connecting the highs. And then you will make an offset for it by simply copy paste or press on control, drag and drop it. Okay, so that's our rejection one. So as price approaches the upper bound, again, we'll be looking for sell setups, and as price approaches the lower bound, if we have a horizontal support also, it would be better. We'll be looking for buy stops, vice versa. If you are bullish, we'll be looking for buy setups, and so on until eventually it's broken downward, until eventually it's broken upward. That's it for our over direction rejection trend line. However, from a short-term perspective, we'll be drawing a trend line and looking for a reversal trade. So if the price is going upward, we'll be waiting for the sellers to take over by breaking below the previous low, like this, for example. Because as per our Max 101, sorry, I've made a video about it previously. If you are making higher lows and higher highs, we'll be waiting for the low to be broken downward to have a shift in momentum, a potential shift in momentum, and we'll be looking for a sell. So that's basically it. In this case, we'll be we'll need to draw a trend line by connecting at least 3 swings, because 2 swings might be random. Of course, from lower time frames, the higher the time frame, it's fine. We can draw it as an over direction, we'll not trade it. But from a short-term perspective, to trade its breakout, we need at least 3 touches around the trend line, because two touches is not enough. Okay, so that's basically it. Now, if you combine these two, right, let me remove everything and show it to you in a like as an all-in-one. So now let's say you are bullish, right? You identified the over direction by connecting, for example, 2 swing lows like this from higher time frames. So 1, 2, we drew this one, make an offset for it, and now price approaching the lower band, right? So like this. Now we are looking for a trend following buy setup, right? We are bullish, approaching the lower band, which is a non-horizontal support. So we are expecting the price to reject it upward. However, we don't buy blindly. As usual, we always look for extra confirmation that the buyers are taking over before we buy. And then we expect the next impulse movement upward, because price can still break this one downward. It's just a potential non-horizontal support, like engulfing the overall movement. It's not like foolproof, or what I call bulletproof. It can still be broken downward, and in this case, we'll have a shift in momentum. We'll be able to draw this bearish trend line, because like eventually nothing can trade the same direction for a long period of time. So like we can't have a bullish trend forever. So now let's combine the two. Since we have this channel from a long-term perspective, now we can zoom into lower time frames and, for example, draw this trend line, which is our, sorry about that, which is our trigger trend line 1, 2, 3. And now we can buy on its break upward. Okay, so like now we combine the two. The bullish one, let's make it in blue for overall direction, and the shorter term one, which is obviously in red. Now let's take as many examples as possible, because you know me, I like practical examples. We've got XMR here, so let's go to auto, and that's it. On weekly and daily, we know where we are in the market. We draw our overall direction channel, or it depends if it's a range, bullish trend, and so on. But I picked this one because we have a bearish one. So from 1 and 2, now we know that we are overall bearish, and we drew this trend line, made an offset for it. So we got this one, which is like lining up perfectly, rejecting these lows here. So as price approaches the lower band, what we'll do is we'll be looking for a bullish reversal. Of course, as price approaches the upper one, we'll be looking for a trend following sell setup until eventually this trend line is broken upward. Then we would have a shift in momentum, and now we might be in a bullish trend. So it's the exact same thing. We draw a channel, lower bound, 2 swings, and then make an offset for it. Then we'll be looking for buy setups here. But let's take it step by step, right? So now we are bearish, making lower highs and lower lows. From weekly, we identified the overall movement, a channel which is engulfing the overall trend. Now let's zoom into lower time frames and look for buy setups. So that's basically it. We've got an example previously. So that's our trigger trend line, because now we are around the upper band, around the resistance, and so on. We are looking for sell setups, and that's basically it. So look at how many touches we have: 1, 2, 3, 4, even 5. And then we had the break below it. Now it's confirmed, which is our trigger trend line, and we can enter a sell. Of course, if you like traded on margin. Okay, so like if you trade it on spot, if you like bought around here, you can now consider that this one is a signal to close your buy or close half. It depends on your risk management. I'm not going to go into details now about it, but I'm going to focus on trend lines. So as you can see, we've got that channel, or like what I call a rising boarding wedge, because this one like is going like flat, like not exactly parallel to the lower one. Anyway, let's delete it and focus on the current price action. We know that we are now bearish. Of course, we can also make like this one, like the previous one, or we can simply delete it, right? But what we care about is this upper trend line. And as we mentioned previously, now we'll be waiting for a new swing high to form around the upper one, like just a projection. We can have a different scenario, but you've got the idea. Waiting for a third swing high to form around the upper trend line, and then we'll be buying on spec upward. Why? Because it's approaching the lower trend line from the overall direction, which is, as mentioned, I consider it as a non-horizontal support or oversold area. Moreover, we have this horizontal support around number 100 and so on. Let's take one more example. We've got OMG. Also approaching a support area from weekly time frame. If you zoom into daily time frame, we can see that we are now going flat, but it's flat in the shape of a falling channel. So we are still making lower highs and lower lows. So we drew this one here because when we are bearish, we start with the highs. If we are bullish, we start with the low and make an offset for it. Okay, so now we are bearish, and price is retesting the lower band. So we're expecting a bullish reversal from here. Of course, it's just a potential support area. Price can still invalidate it or break it down without respecting it. That's why we don't buy blindly. We look for buy setups. Of course, from a long-term perspective, as price approaches the upper trend line, we'll be looking forward for trend following sell setups. It would be a non-horizontal resistance area until eventually this trend line is broken upward. Then we would have a shift in momentum from a long-term perspective. Now we're expecting OMG to trade higher and higher. Now, if you zoom into lower time frames to H4, you can see it very, very clearly. We've got a trend line here previously, multiple touches. We can see it better from lower time frames. So 1, 2, 3, price broke it downward. We had a bearish trend. Now we are applying the same logic. We are now bearish, approaching the lower. And here we go. We can see it even better from H4. So we are bearish. So impulse, correction, impulse. Now we are looking for this movement. Of course, we can trade lower. That's why we don't buy blindly. For example, we'll be waiting for a new swing high to form here and then buy on break upward. That's when the bulls would confirm that they are now taking over. Okay, so that's another example. Let's go for one more on one. Okay, so this is the exact same shape we saw previously, because like the entire market moves in a very similar pattern, of course, like in general. So we've got this trend line here, multiple rejections from it, right? Like 4 broke below it. Now we are bearish. Now we are waiting for the bulls to take over. If you zoom out to daily time frame, here we go. We are bearish. We've got a lower low, identified these two swing highs, made an offset for it to get an idea about where is our oversold area or where is our lower bound, which is the lower trend line in orange here. So price is currently approaching it. Of course, we can trade a little bit lower, dive inside it before trading higher. That's why we zoom into lower time frames for extra confirmation. And as price approaches the upper bound, which is also this support and resistance, we'll be looking for sell setups until eventually this trend line is broken upward and so on, right? So the exact same analysis we did previously. That's why I like to go over as many examples as possible. So I like to understand it even better. That's it. Previously, we were around a resistance area, right? So support multiple times, broken down with resistance. We were looking for sell setups here, if you remember. Then we zoomed into lower time frames like H4, and we saw this one here. We entered a sell on swing upward if you traded on margin again, or futures and so on. For now, approaching the support, and we also got a demand, I guess, from weekly. We can see it even better. Here we go. But a demand here. So around this entire area, we'll be looking for buy. So price can still dive to fill this demand before trading higher. That's why it's very important to wait for extra confirmation. That's it from from H4. We can see this trend line. As usual, just like the previous ones, we'll be waiting for a new swing, for example, and then buy on its break upward. So while waiting for a trigger, right, like for a reversal, as mentioned at the start. So lower time frames are for trigger. That's why we need as many touches as possible. On higher time frames for over direction, we only need 2 swings, 1 and 2. We can draw it for overall direction again and again. So that's it for trend lines. Let me know in the comment section if you like the content, what you would like me to talk about next, and if you want me to analyze a specific coin or token or instrument in general, let me know. And I'll see you on episode 7.